And the key nuance, or you could say mental model I used was very simple, which is I looked for companies that were selling for half or less than what they were worth in 2 or 3 years. So if I could find a dollar bill for 50 cents, then what that meant is that if it got valued as a dollar in 2 years or 3 years, I would be compounding at 26%. And if it happened in 2 years, it would be even higher. It'd be like 35, 36%. And if it happened in 2 years, it'd be 26%. And so I said, it's worth trying to seeing if we can find these 50-cent dollars, because 26% sounds high, but finding things that are half off in an auction-driven market is not. I didn't think it was that hard, and I thought it was worth trying because the rewards are so high. And so that's what I embarked on doing. Is I said, okay, let's try to find these, dollar bill for 50 cents, and then you just sit back and wait for 2 years or 3 years, and markets are weighing machine in the long term, and they'll get reweighed accordingly. And for the most part, if I look at my my performance from 95 until let's say 2014, it's done about the 26% approximately. Last 2 years, I'm down about 1/3, so we're taking it down a little bit. But we think in the next few years we'll make it up. So we'll see how it goes. I'll report to you next year when I'm with you in person. And but this journey, it's been 21 years since I started doing this, and I had $1 million in 95, and I wanted to try to see if that million in 30 years could convert to $1 billion. So I said, okay, basically, we have the million. I don't really need it for anything. I'm going to try to put it in this Buffett engine of compounding, and I want to see what happens to it. And the good news is that even if I miss by 90%, it's still a big number. Even if I miss by 95%, it's still a big number. They're all acceptable numbers. So it sounded like a good game to play.